Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the market cycles. Where in the cycle are we? If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Before we jump in, I wanted to mention that I will be going to Bitcoin Amsterdam next month, and I'm actually going to be speaking on one of the stages on during the conference, right? During the conference. So if you are interested, make sure you guys check that out. Again, that's November 13th and 14th in Amsterdam. I'll be speaking with I know we're talking with the Rational Root. We have Andre and then Matt Crosby as well will be there. So looking forward to seeing a lot of you guys there. Now, in this video, what I want to do is talk about where in the cycle are we? Now, you guys know, in general, Bitcoin operates under a 4-year cycle. And what I mean by that is that major market cycle tops have always occurred in the fourth quarter of every post-halving year. Okay? So, again, this is not, I'm not saying this is what I want. I'm just saying this is how it has been. Right? So let's make sure we clear that up. You first have Q4 of 2013. You have Q4 of 2017. You have Q4 of 2021. And potentially, but not proven yet, Q4 of 2025. So, the idea is if it's not broke, don't fix it. Right? This cycle has operated under this assumption for a long period of time. And now, of course, we have all the same discussions we've always had as to whether this time is different or not. And some people are saying it is different. Some people are saying it's not. But regardless of what you think, I think it's prudence to at least consider that it might play out like it has played out before. A lot of people are under the illusion that the 4-year halving cycle, or the 4-year cycle, is based around the halving. But I actually don't think that's true. And the reason for that is because you can find evidence of 4-year cycles well before Bitcoin was ever created. If you look at the S&P 500 and you go back to the 1950s, 1960s, and 1970s, you will find that essentially major market cycle lows occurred approximately every 4 years. If you go back to, say, 1958, 1957, 1958, and then you have 1962, 1966, 1970, 1974, 1978, 1982, you can see that the 4-year cycle has been a thing in the past where the market bottoms approximately the end of the midterm year, right? So this was October of 66, May of 70, so it was a little earlier in the year. October of 74, this was a little earlier, February, but again, still in the midterm year. In 82, it occurred in August. Back in 1960, it was in June with a slightly higher low in October. So the 4-year cycle arguably exists outside of Bitcoin. It's just that with Bitcoin, we had a convenient halving that happens every 4 years. So it feels like Bitcoin has the monopoly on the 4-year cycle. But in reality, the markets have been respecting 4-year cycles well before Bitcoin was created. In fact, even in just the last few years, you could argue there's been some evidence of it, right? 2022, 2018, 2014. So there's evidence that you'll find major lows approximately every 4 years. Sometimes, like in the current massive business cycle we're in, those lows are higher lows. There are times in the past where the lows could be lower lows. But at the end of the day, whether it was a lower low or a higher low, The macro higher lows, the macro lower lows tend to occur in the midterm year. So what that means is that for Bitcoin, I think it makes sense to expect that there will be a bear market in 2026, and that we should expect a macro low sometime next year, which means that sometime this year, we likely find the market cycle top. Now, whether that is already in or not remains to be discussed. There are reasons that people think that this time is different. And the reasons are not necessarily absurd, but some of those reasons surround the fact that a lot of the peak indicators that people developed back in 2018, 2019, none of those have really triggered yet, at least not most of them. If you were to go look at, say, the ROI of Bitcoin from the cycle low, and you just compare this cycle to the last two cycles, you could argue that if the top were already in, it would actually be in around the time it's normally in every cycle when you measure it from the bottom. The reason why it feels like we're further along than in prior cycles, despite it only being October, is because in some of these cycles, like in the 2013 cycle, the actual low was in January of 2015. So the low occurred 2 months later than it did in this cycle, because this one was in November 2022. So the reason why it looks like the cycle has already been spent compared to that cycle is because, as measured from the low, it actually has gone on just as long as it did back then. The question, though, is can there be another rally into December, or is it ultimately over? When you look at this chart by itself, it looks pretty depressing, if we're being honest. You could also look at cycle 1 and 2 and see that they look kind of different, but I think that the reason they look different is because of the interpretation of them. When I looked at that chart, when that was chart created, I was looking at this as one cycle and then this as a second cycle. But arguably, why not just say this whole thing is one cycle with a top in Q4 of 2013? And that way, with the low in, say, 2014, 2018, and 2022, that means the prior low would be in 2010, right? So right here. So why not measure it from there? If you do that, you get something that looks like this. We're going to combine cycles 1 and 2 into a single cycle. That makes the current cycle look a little more optimistic. If you were only to compare this cycle with that first cycle, perhaps there is a little bit more room to run. If you compare it with cycles 2 and 3, it leaves something to be desired. Now, if you measure the ROI from the peak, it's more optimistic when you view it from the lens of the 2017 cycle. If you go peak to peak and you compare this cycle to, say, cycle 3 last cycle, you could already argue we're due the bear market, right? If you look at it like that. But if you compare it to the 2017 cycle, it's not impossible for us to just be in this final dip here before the final rally into the market cycle top. So it's tough to say when you look at it like this. If you look at it from the halving, it also looks like we're pretty far along, but I think we're not necessarily. Like, if you look at the halving cycles, you can see we haven't even gone as long as last cycle when measured from the halving. That topped after 546 days. We're currently at day 544. So we're getting along in the cycle, right? Whether the top is in or not remains to be seen, but we are getting pretty far along in the cycle. But the reason why it feels different, right? Like why it feels like there's something to be desired is if you go look at some of the top indicators that people have developed. One of the things you'll notice is that a lot of these indicators really haven't gone off. If you look at something called the terminal price, we haven't tagged that. We haven't even gotten close to it, right? The terminal price is 281K. How do we reach that, right? And even if the top is not in, is there really a chance that Bitcoin goes that high before the end of the year? Probably not, right? I mean, it could go up, but is it going to go to 300K by the end of the year? Probably not. So that's one. There's other ones as well. For instance, if you were to look at like the MVRV score, it still is pretty low. All prior cycles have spiked above 6 before the top was in. So what's going on? It's either not going to happen or it's still ahead of us. you could make this same argument for a lot of charts, right? For a lot of charts, you could make the same argument that, it feels like there's something missing, but also there's no guarantee that it happens. If you look at some of these charts, you'll find similarities actually with this 2019 move that also occurred during quantitative tightening, and ultimately that topped out pretty low, faded, and then went up again a lot after QE began and after interest rates dropped back down to zero. So maybe we have to compare or think about that similarity. And what I essentially mean by that is if you were to overlay, interest rates and you were to overlay total assets held by the Federal Reserve, one argument, which is kind of a weird argument, but this QT that happened right here also happened while Bitcoin was going up and also occurred while Bitcoin dominance was going up. And then we went into this slow bleed. We had a recession, and then QE came back, and then you can see what happened, right? So maybe that this entire QT, this entire bull market by Bitcoin is kind of like that bull market right there. That's kind of a crazy thought, but it is something to think about. And that's one way that 2026 could shape out to, to be a bear market, but it not be as bad as people think, where what if the bear market, maybe we even go a little bit higher before it's over. And then in 2026, we just kind of get this slow, steady decline. You get some type of scare by the end of the midterm year, and then they turn the money printers back on, they lower rates, Jerome Powell gets replaced, and then you see another rally after that. That's a complete possible outcome as well. So it's tough because if it were December and Bitcoin were sitting at 200K, then a lot of people would probably be fairly convinced at that point, all right, next year is going to be a bear market, right? The problem is that we don't know if we're going to get that last move or not, right? We can't know that until it's already behind us, right? So we don't know for sure. And so it's hard. And I would say, like, if we're sitting here in December and the price is the same, that's going to be a tough pill to swallow, because then at that point, you're like, all right, well, if next year's bear market and we don't get the blow off top, that could be a pretty brutal bear market. One of the charts that we've shown a lot is alt Bitcoin pairs and how we've made this comparison to 2017, which again is my baseline comparison. But in 2019, shortly, around when QT ended, we had a bounce by alt Bitcoin pairs and Bitcoin dominance went down, but it was only going down because Bitcoin was dropping quicker than altcoins. So that is a scenario that we ultimately have to consider, even if it's not necessarily the base case. It has to be a scenario we have to consider. And that's why I say, in a cycle like this where we cannot know for sure if the cycle top is in, the thing is if the cycle top is in, then you're likely going to see alts become devalued to the range lows as Bitcoin kind of keeps going sideways with a slightly bearish bias. If the cycle top is not in and Bitcoin goes higher, the process of going higher is going to send altcoins down on their Bitcoin pairs, which means that Bitcoin is a better hold than a lot of altcoins right now. Right? The only way we get an alt season that people want and that people have been calling for 4 years, the only way you get that is for Bitcoin to go to new all-time highs. If Bitcoin does not go to all-time highs, it's basically just going to slowly bleed out as alt Bitcoin pairs get devalued. So if we just see a slow bleed here by Bitcoin and no rally, then there's really not a great reason to go buy alts. If you do get a rally by Bitcoin and Bitcoin dominance goes to the moon again, then converting some of that Bitcoin back to altcoins a little bit later in the year might actually make a little bit more sense. But the problem is a lot of people, if you're all in on an altcoin in the hopes that that's what happens, you just don't have a lot of wiggle room. Whereas if you've just been buying Bitcoin and holding Bitcoin for the last several years, you still have the opportunity to convert and still experience that potential upside in the rest of the market while also minimizing your downside risk in the short term. The way I would look at this to try to look for confirmation of the top being in is weekly closes below the 50-week moving average, right? So, we haven't seen the peak indicators trigger, and hopefully they do trigger. I mean, I would love for us to just get one more rally into the end of the year, for this time not to be different, and then for us to just have the bear market next year. We all come back at the end of 2026, and we repeat the same process that we did this time. That would be my preference. And what I'm looking at is that 50-week moving average. And the reason I look at the 50-week moving average is because every cycle we got weekly closes below it, the cycle was over, right? It was over at that point. And so I don't want to minimize that, right? If we get weekly closes below the 50-week moving average, cycle's likely over. You can see that 2 times this cycle already, we've had weekly closes around it, but they were above it. We wicked below it, but again, we stayed above the 50-week moving average on the weekly close. So that's what I'm watching for. If you get 2 weekly closes below the 50-week moving average, I would have to start leaning towards the top being in. But for now, there's still reason to be somewhat optimistic as long as you have weekly closes above the 50-week moving average. You have to trade the market in front of you, not the market that you want, right? The market that people want is an alt season, where altcoins durably go up against Bitcoin for about 1 to 2 months. That's not the market that you have right now. The only way you're going to get that market is if Bitcoin finds support before getting a weekly close below the 50-week moving average. My point is if you want to bet on the market, Bitcoin gives you exposure to the upside if it finds support there while minimizing your downside risk. Because if Bitcoin does drop to the 50-week moving average, altcoins are going to get rinsed just like they did last Friday. So the other thing to look for is that the entire cycle, or at least recently, you'll see that when altcoin or when Bitcoin drops, it likes trying to find support around the prior high. So that's another thing you should look at, because when Bitcoin found support back in April, it was finding support at this high, the 2024 high. And then the levels that it's trying to hold as support now kind of correspond to the highs from late 2024 and early 2025. The other thing that I want people to remember is the potential next death cross could be coming up if price action stays suppressed like this, where the 50-day crosses the 200-day. Now, the death cross sounds bad, but remember, usually when you get death crosses, you get rallies on the other side of them. Death crosses are lagging indicators, so by the time you get it, it sounds like a bad thing, and then usually price just spikes on the other side of the death cross. So be aware that if price stays suppressed right here, then you likely will start seeing the 50-day moving average come down, the 200-day SMA go up, and you'll likely get a death cross. Just note that the last 3 times we had a death cross, it actually corresponded to a major low by the price of Bitcoin. And if the top is in, you would still likely have a rally, right? Like even in 2019, you had a massive spike on the death cross, even though the top was in. So the process for the top being in would be sort of a macro lower high, which we still don't even have yet. The last high we had was a higher high, not a lower high. So I think that would be the process that you have to go through to kind of come to that realization. But for now, there are pockets of optimism. While it doesn't look that great when you measure it from the low, when you measure it from the peak, there's still some reason to be optimistic. Here's the low. It's not as optimistic. When you measure it from the peak, it's a little bit more optimistic, especially if you compare it to that 2016, 2017 cycle. And there's reasons to make that comparison. If you look at like the number of days since Bitcoin had a 50% drop, it really does look a lot like the 2017 cycle where there was just really low volatility. And then by the time you got it, it was, that drop occurred in early 2018. And it ended up being a 50% drop pretty quickly. So I think that for me, for now, it's a tough market. I think it still makes sense to keep most of the crypto portfolio in Bitcoin. Obviously, I do have some Ethereum in the hopes that Ethereum can get another rally to 5K. But I think focusing mostly just on the blue chips and especially Bitcoin makes the most amount of sense. If the cycle is over, you would likely have confirmation on weekly closes below the 50-week moving average. The 50-week moving average is a moving target. Currently, it's sitting at almost $102,000. It's not even that much lower than we currently are right now. So if you get 2 weekly closes below that, so essentially below 100K, that might be your confirmation that the top would be in. But again, until that happens, hopefully we get another move up. So that's generally my thinking on this stuff. I don't have a crystal ball. Like I don't. And I want to see Bitcoin do well. I will say this. In early 2026, it'll likely be obvious that the top is in, whether the top's in October, November, or December. My thinking is that the low will probably be 1 year after the top. So if the top's in October, then the low will be October 2026. If the top's in December, then the low will likely be December 2026. Usually Bitcoin needs about 1 year after a major high to then form a major low. So we'll see how things go. For now, I want to give Bitcoin, sort of the breathing room to see if it can get another move up. If we get those weekly closes below the 50-week moving average, I probably will start to change my tune. Until that time, Hopefully we get one more one more push. I think regardless, you will have a macro lower high if the top is in, and that would occur. That would of course occur, sometime in the next couple of months or so. Usually that's what kind of happens is if you drop below the 50-week moving average, you'll drop and then you'll just kind of rally right back up to it. That's what usually happens, right? You drop below it, you rally back up to it, and then the bear market's kind of in full swing. I guess it didn't quite get that same rally over here, but there was still a rally after the drop below the 50-week moving average. So that's what I'm watching for. Let's see what happens. Do not be complacent in Q4, right? Do not be complacent in the fourth quarter of the year because I think the top will be in this quarter. It's a tough thing to say. I know people want this time to be different. Maybe they're right? Maybe they're right, but I don't think they are. I think the top will be, for Bitcoin, I think the top is in the fourth quarter of the post-halving year. It sets up a bear market next year, which then just sets up another opportunity. It's tough to accept now because the top indicators haven't gone off. If the top indicators still have not gone off in 2 months, they're probably not going to. Okay? But it's not December yet, so we'll have to see if anything changes. The way I've said it before is I think the odds of a top, if you look at like October, November, December, I think the odds of a top are 40% in October, 20% in November, and then 40% in December. That's kind of how I am playing the probabilities. That's what I think. That's assuming the 4-year cycle is intact. Anyways, guys, we're going to wrap it up there. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.